I didn't expect that he will know you. Okay. But he said, Ankur Mittal is coming. I said, don't get it wrong. It is not Anupam Mittal.
Or
Me calling Anupam
or
Ankur.
Lakshmi Mittal, or
No, no.
it's a famous last name.
The listeners should be careful about what they are listening,
A lot of successful startups are going to come out of this ecosystem.
Tomorrow's listed giants are today's startups.
That's what IPV has done. It has created a platform for many of you to come together and invest collectively.
Wish I was there when this company was setting up.
If the founder has not thought through how they are going to use the funds, guess what? You will lose your mind.
They should be definitely listening to the series.
Absolutely.
Ankur, help us understand from a point of view of global allocators and investors which are keeping a close watch on India's startup ecosystem. If you can help us decipher what promise and this investments in Indian startup really holds for them, and what is the premise, what are the numbers that you can share with us on the size of the market, the amount which has been invested, some shades of domestic capital and global capital. If you can just lay out that landscape, will be very helpful.
I think, 2021 was a very important year in the Indian startup ecosystem space because it saw record fundraising by the funds and record investments in the startups by the funds. But it also saw the emergence of family offices, and we have still, it's just the tip of the iceberg. India has got, large corporates with tons of cash on their books, which are probably currently invested in asset classes that are not generating even a return higher than inflation. So there is a lot of scope for more corporate and family office money to come into the Indian startup ecosystem. And then the other advantages, and which some of the family offices have very intelligently started using, is investing into startups that can directly, indirectly support their businesses, and then eventually either acquiring them. And so therefore we see a lot of theme-based funds and family offices that have come out, like Sharp with Marico and Imami investing from their books, which are consumer-focused, even Lotus Herbal investing. So that's in the beauty space. Then we see similarly in the medical space,
Right.
and we have seen all that investments. Now, if you look at the other reason why 2021 was important was because for the first time, India produced more unicorns than China, and more institutional FII, foreign institutional money, came into India versus China. So now this is, add to that a China plus one, theme, which the whole world is talking about these days. India is truly positioning itself as a very viable alternative. Now, so to that extent, I think a lot of global investors who had never looked at India before are now coming to India. Number one. Number two is people who were making small investments have started making big investments, have started taking, setting up shops here, hiring teams here. Third is, if you look at the macro, the Indian macro is very strong. As I was mentioning earlier, relatively young population, very high internet penetration, access to smartphones, rise of digital transaction, the Indian government coming up with UPI, the Indian government now focusing on logistics, and add to that the fact that even the most conservative estimate says that over the next 7 to 10 years, we will double our GDP. So something that we have done over the last 75 years, we are going to match that or exceed in the next 7 to 10 years. Now, that is going to be a huge growth, which can't be explained in numbers, right? We might be still behind China and maybe Germany and Japan. We don't know where we will be in the top 5 countries, but probably we will be the 4th or the 3rd largest economy. And so therefore, a lot of wealth is going to get created in India. And more importantly, what will happen is that startups will play a very important part. And we are seeing the signs. Current government is very startup friendly. I took a train after like 20-25 years for the first time when I tried out one of these Vande Bharat trains. And they were serving Chayos tea.
Wow.
Not Tata, not Lipton, not like any of the established brands. Chayos, right?
Wow.
Which shows the commitment the government has towards the startup, that if the product is at par with everything, then they're going to give it a chance, right?
Yeah.
We now see some of our drone startups, some of our, startups which are into 3D printing, them or our startup into Vision AI. Like recently we invested in Enigma AI, right? They have got orders from the government already. They've created a government portal, and you just go on that portal and you bid and you get. So I think, along with the fact that our private companies are looking to now make for the world. And so therefore they can benefit with the innovation, which they may not be able to do it as part of their own structure because they have too much to lose. So they may actually work it through the startups. So I think that is why global investors should look at India, because a lot of successful startups are a lot of wealth creation opportunities, a lot of positive returns are going to come out of this ecosystem.
No, fair, absolutely. I think very well put, Ankur. The other part which I see, many international organizations, MNCs like Amazon and others have immensely benefited because of Indian demographic dividend. If someone has really milked that, they are the people who have truly seen and witnessed what demographic dividend can yield on the balance sheets of companies like Amazon and H&M, IKEAs and stuff. And one way, as I understand that global funds participating in India's startup space is also to get access to the innovation that is taking place locally. Do you see also a large space of IPs emerging also be an attractive point for investors? Should they look at it from that optic?
I think IPs will be a byproduct of all the innovation that is happening. I see a lot of space startups getting funded now. Now, typically, space startups will have a very, very long gestation period. So you will not see an exit in 2 to 3 years. You'll have to stay invested for many years, because first you have to build the tech and then you'll have to wait for monetization opportunities. But yet I think Peak XV invested in Digantra, if I'm not mistaken. I think a $10 million check or something like that, if my memory serves me right. That's a very good sign. We are ourselves looking at quite a few drone startups now. They are all trying different things. We have already invested in a couple. Urban Matrix, which is creating a software inside FPV, which is more consumer focused. But the fact that there is a demand for consumer drones, that itself is a reflection of what is the potential in India. But then we have Tech Eagle, Bonvi, which we are currently evaluating, and we may fund them. They are all, trying to, fly at high altitudes. They can be great for logistics, great for defense. So these are all the tech, but a lot of this tech is untested, and they will need some early backers. And that is the potential that India has. There is a lot of opportunity. So I would personally see that a lot of innovations will get created, and therefore IPs will be a byproduct of that. It's now up to us whether we want to, how much we want to protect, because part of the IP filing requires you to put everything in black and white in the application itself.
Imagine.
And so sometimes it's better to go with a trade secret and not just go for filing. But that said, I think there is going to be a lot of innovation. And finally, I think, for example, when we invested in NeuroPixel, you and I, right? We didn't know then, but what we used to call GAN then is nothing but generative AI.
Generative AI.
Except that, while ChatGPT is, text, NeuroPixel is images.
Right.
And now Google has come something with it, and, some other companies may come. So the fact that we are investing in technology, which has not yet been built or successful, and which companies like Google's and the Microsofts of the world are still, working or even acquiring the companies to get that access to.
Right.
I think that by itself is a indication of what is possible from this country. We just saw, yesterday about our ability.
Absolutely.
We have reached where no country has reached before.
Right.
And I found a very funny tweet this morning that it costed us less than what a Christopher Nolan movie costs. Right?
Absolutely.
And we actually sent something to the moon and something to that part. So I think by nature, we are cost conscious. By nature, we are frugal. By nature, we are conservative when it comes to spending. It's not our nature. It's not in our DNA. And I think that kind of habit, while, ability to build, innovate, which for many years was probably not encouraged as much. I think it's getting its wings now.
No, but absolutely. In fact, on that point, I do have a list of questions on the culture of India, how we differentiate ourselves, how we stand out in the global pack, our habits of the conservative habit that you mentioned, and there are other aspects to Indian spender or consumer or investor. I would like to pick up the thread from here from you, and this is with regards to the investment theses. Now, having understood how the investments have been approached by venture funds and the formula of investing, so if India has to rewrite the rule of investment thesis itself, where would you find you, and where do you see that in that light as I see it?
See, we have already taken a stand that investment thesis doesn't work for us. And we are a microcosm of what an average Indian would think like. So one of the challenges I had when I moved back to India and I wanted to start my angel investing journey was that, I realized that to do angel investing, the way people do it is not only you need very deep pockets to do a spray and pray, but you also need a very strong gut. Because you should have the ability to invest all through the losses. Because what does a failure rate of 80-90% means? That you have to keep investing even when the startups are failing left, right, center. Because the startups that have to fail, they will fail in 6 months, 12 months, 18 months, right? That journey will be short. Versus a startup which has to deliver you exponential returns will take its 3 years, 4 years, 5 years, 6 years time to deliver those returns to you, right? So therefore, to target that 1, 2, 3 startups that will generate you exponential returns, and they do, right? And so overall as a portfolio, you'll still be fine, but you should have the ability to invest through all the losses that keep happening around you. And I realized that is not my style of investing. That is probably not an Indian way of looking as well. And therefore we still see a lot of investments going in real estate, whereas now the appreciation and the yield are still very low, or still record money sitting in fixed deposits, right? These are absolute real numbers, right? I mean, I think 15% of our total savings, India has got 30% of our GDP is savings, right? And of that saving quantum, I think 15% is in 15-20% is in gold, 15-20% is in FD, exponentially high percentage that you would have not seen anywhere else. And why are people putting it in gold and people putting it in FD and real estate? People don't want losses.
Yes.
Okay, this is in our DNA. We don't like losses. We don't want to incur losses. Our banks have a lending requirement which is like 3 years of profitable company, right?
Absolutely.
These are our principles. Some things have to change. We have to innovate, we have to motivate, but it doesn't mean that we will all of a sudden be okay with losses. So one of the things that we did differently at IPV, for example, was how can we bring down this failure rate? And so we focused on 2 things: strong upfront due diligence and strong post-investment support. And for both of the things, we realized we need people like you. We need people who are not only willing to put in their money, but also their time, connect, network, resources for the success and the betterment of the startup. Because capital is only one of the problems you solve.
Yeah.
And the outcome today is that today our success rate is more than 90%. Out of 170, 180 startups, in 8 startups, we have not returned capital. Now that number will go up. Some because of businesses not scaling, product market fit, founder market fit, yada. Some because of funding winter, good startups couldn't get funding in time. So that number will go up, but that failure percentage will still be far, far less than the globally acceptable 80% failure rate. And so for us, this was very important to make angel investing a viable asset class. Now the beneficiaries of these will be the foreign funds, right? Who will enter into a high growth economy, who will adapt to the Indian style. What is important is that culture continues. So even that founder is encouraged, and that is why as much as 2021 was important for the Indian startup ecosystem, 2023 is even more important because it is changing the mindset. People are realizing there are no free lunches, there is no free money, and that in the end there is one truth, and that truth is cash.
Yeah.
Right? That truth is, and if your business is cash flow positive, then your returns could be less, but the returns will be there.
Right.
right? Of course, cash flow positivity may not happen on day one, but I think all of these things together, where they keep that discipline, that financial prudence, we have investors who will ask tough questions on expenses. I still see there are, many traditional businesses, they will still fly economy class, whereas the new age founders and bankers and investors, and I was doing banking in 2007-8, they all used to fly private and everything. So it is just the way, the world has changed. It doesn't mean we don't move on with times. It doesn't mean we don't upgrade our lifestyle. Absolutely enjoy it if you have worked hard for it.
Not on borrowed funds or not on the
Not on
investment.
borrowed funds, not on, but
Investors,
prove yourself, get into the cash flow positivity, get into the profitability. And then, yes, when you're not answerable to anyone, please go ahead and enjoy the life you do. So I think that is the Indian style of investing. But that is also not truly correct. Like I said, corporate balance sheets are sitting with thousands of crores, losing interest, opportunity cost of cash. They can benefit by investing in startups, not just in terms of returns, but also the benefits it brings to their business. So I think somewhere we have to change, but somewhere we have to also retain our roots, and good things will come out of it.
Right. No. I think well said, Ankur. And cash is very important, and I think founders are pretty realistic now. But basically, this is also to kind of, and players like IPV and yourself who speak about time to rewrite the rules in a way that resonate with our culture of investments. And I'm telling you that they have the list of things that they will not invest in.
And I'll tell you. So first of all, you go pay 50 rupees on MCA website, and you can download the audited financials of any private limited. Number one. Number two is, on the contrary, for the public listed companies, I probably own shares of many large, companies. I have not attended their annual AGMs and all. I don't read the annual reports that come to me. I've invested in mutual funds. They invest. I don't know where they are investing. I've not looked at the report. I just look at my return, right? And I'm an average investor. That's how average investor invests. I don't do it for lack of time. Many people don't do it because of lack of knowledge. On the contrary, I see when you invest in private investments, when you invest in startups, at least like in IPV, we have these quarterly SIP calls, startup investor partnership calls, like we call it. They come, the founder is there. The founder has either done well or has not done well, but the founder is sitting there. With the numbers. You can ask the founder the questions. You can ask founder uncomfortable questions. You can ask founder what worked, what didn't work. You made all these tall promises. Why are you not delivering? And the founder will, respectfully, hopefully, but the founder will have to answer your questions, right? That kind of access
it's definitely
you will not have in public markets. So, at the same time, we have seen, bad corporate governance in the largest publicly listed companies all over the world. So if things have to go wrong, they can go wrong in public markets, they can go wrong in private markets. I've seen many large companies getting corporate governance award, only 4 months later folding down because of bad balance sheets.
Right.
I have been an investment banker on Wall Street when the whole financial crisis happened, right? Few months before that, all these banks were doing record earnings, hosting parties where, everybody was coming, but then all of a sudden these banks just evaporated from the surface of this earth, taking away everybody's money with them, right? So, and many of them were publicly listed. So I don't buy that argument of public versus private. I think it is a question of knowledge and access. Private gives you knowledge and access more than public.
No, this is again great to clarify these things because, as I said, when we speak about investments in our investment circuit and friend circuit, most of them who are in the listed space, so to say, hesitate to come and cross the fence to private market. You rightly said there are regular calls that happens with founders. You are open to ask your questions. But where it's coming from most of the time, which my friends say, if you're not doing the right thing, the street will punish you. And hence, my next question is, I believe that you have been quite vocal about the valuation space in the startup. What are the challenges that you see in valuation space, and how does what all IPV does to get founders a reality check? If you can just throw some light on that.
No, absolutely. See, valuation is a very funny topic. I've taught valuation at some of the leading business schools of the world, INSEAD, London Business School, so on and so forth, right? And I've also been invited to talk about valuation at large sovereign wealth funds, top investment banks. And this is my life before IPV. And in the end, valuation is nothing but art and science. So at the end of the day, even if you're doing DCF, and all the public market people swear by DCF, what I tell them is that you give me the same set of financials and I can come up with any valuation you want, right? Okay. Because it's all about me playing around with the growth assumptions, margins, and in the end with my, my discount rate. And there are several ways to adjust the discount rate to get to the conclusion you want, right? So at the end of the day, whether it is public markets or whether it is private markets, valuation will be a combination of art and science. And that still stays in private markets. Now, private markets can also have cash flows. The problem is that for the next few years, they might be cash flow negative. And therefore, there is no real point in running a DCF on that. So therefore, there are other alternative valuation methodologies. What I try to focus more on is how much money the founder has to raise, wants to raise, should raise, and how they are going to utilize that money. So I spend time understanding the utilization of funds. That then gives me an indication, have they thought through what are they going to do with this money? Because it doesn't matter the valuation. If the founder has not thought through how they are going to use the funds, then whether that startup comes at 8 crores or 80 crores, guess what, you will lose your money, right? So it's very important that the founders have thought through crystally how that money is to be deployed. Okay. Now comes the back calculation that, okay, this is the money they absolutely need. And how much should they dilute? Because what you also don't want is for them to have no skin in the game left. So let's say a startup, you want to give them 2 crores, you only value them for 3 crores. So now you own, 40% of the company on a post-money valuation, right? And what is the point? You're holding 40%. In the next round, the founder will be below 50%. By the time it's Series A, right? The founder has no skin in the game. No VC will write a check. So what good is that 50% you're holding if you can't sell it, if you can't exit? So you have to also be cognizant of the fact that the founders in the end have to have a decent skin in the game to work hard for your money to grow. Right? So valuation for me is a function, but I think what happened in 2021 was an outlier. Too much money, too much liquidity was being thrown around. And so therefore some good startups got funded at crazy high valuation and they're struggling under the pressure today. Some bad startups got funded when they should have not funded, but now they're not doing well. And therefore they will bring bad name to the entire ecosystem. But for the investors who are listening to this podcast, the good thing is this has already happened in the Indian startup ecosystem. I'm not saying that this will not happen again. Everybody knows human beings forget pain. Otherwise, we would have never learned to ride a bicycle. All of us who know how to ride a bicycle would have fallen at least once.
Yes.
We would have scratched our knees, our elbows. Our mothers would have shouted at us, and we would have got tetanus injection and it would have hurt for a few days, right? Or in India, we play cricket. That cricket ball hurts. When it hits you, it hurts. It leaves a mark, right? But we all loved to play cricket, and we played cricket. Some of us, some of
and you'll be buying an IPL team
and
soon.
Hopefully I'll be. Anyways, what is important is that people realize that a lot of maturity of Indian ecosystem has happened. While, exuberance can come again, but lessons learned now will not easily be forgotten. So that should give them the confidence of looking at the Indian startup ecosystem now.